A lot of you guys out there are ruining your credit score and you don't even know it. When it comes to having a good credit score, you guys, there's typically 5 big things that you guys want to look out for that tend to bring your credit score down if not properly cared for. Now in this video, ladies and gentlemen, I will be going over 5 surprising ways you guys are ruining your credit score without even knowing it. So if you guys want to know what these 5 things are that are causing your credit score to go down, and more importantly how to fix them, then make sure to watch this video all the way to the end so that way you, sir or ma'am, do not miss out on any good financial information that can help you out. If you're already subscribed, then welcome back. But if you guys are new to my channel, my name is Sanford, and you are now watching Just Money, where we talk about financial related topics such as personal and business credit, real estate, and other financial related topics. So if that's something you're into, then you're probably going to want to consider subscribing. But without further ado, let's get into today's video. So jumping right into it, the first way you guys are ruining your credit score is by either missed or late payments. For those out there that don't know, your payment history makes up about 35% of your credit score, which is pretty close to half of what your credit score is made out of. So if you guys have a missed or late payment, then this can drop your credit score by a significant amount. Now, if you guys do miss a payment, whether it's a loan or a credit card, it's not going to get reported to the credit bureaus unless it's 30 days past due. So you guys do have that window to make that payment before it does get reported to the credit bureaus and affects your credit score. Now, depending on the lender or credit issuer, late fees typically do apply. But again, you do have that 30-day window to make that payment before it reports to the credit bureaus and affects your credit score. Now, if you guys do miss a payment for whatever reason and it is 30 days past due, then your credit score can decrease by over 50 points, which is a very significant amount. But not only that, now you have a late payment on your credit report. But if you guys are 60 days past due and it's still unpaid, then the negative impact on your credit score is going to increase a whole lot more than just those 50 points. Now, if you guys are 90 days past due and you still haven't made your payment, then your credit score is going to significantly drop by over 100 plus points. And not only that, this could also lead to your account being sent to collections or your account even getting charged off. If you guys have a charge off or a collection on your credit report, that's going to look extremely bad to lenders out there whenever you guys are trying to apply for something, because you're basically telling them, hey, I can't be trusted because I don't make my payments on time. So you guys definitely do not want any collections or charge offs on your account. And then as far as late payments go, these usually tend to stay on your credit report for up to 7 years. But with more time that passes by, like if 2 years passed already and you've been making your payments on time within those 2 years, then that late payment from 2 years ago doesn't hold that much weight no more. So you guys can have a late payment on your account and still get approved for new loans or credit cards if you guys been making on-time payments within the last 2 years after your late payment. But to be honest, I wouldn't even put myself in this position in the first place to even begin with, so always make sure to make your payments on time and in full. And honestly, ladies and gentlemen, if you guys feel that you're going to have a late payment soon, then I would just call the credit issuer or loan department and ask them for some kind of extension on your payment due to hardship. For those out there that don't know, a lot of the times these companies offer hardship programs to where you can actually miss a payment and it won't affect your credit score because maybe you're going through some kind of hardship in your life, whether it's medical or personal related. So these lenders will actually let you have a 30-day extension. So in other words, having more time to make your credit card or loan payment, so that way your credit score does not get hurt. But that's going to be the first way you guys are ruining your credit score. Now let's move on to the second. The second way you guys are ruining your credit score is by running up your credit usage. So in other words, owing too much on your credit card. Credit usage accounts for about 30% of what your credit score is made out of, which is the second biggest factor when it comes to your credit. Typically, you guys want a credit utilization ratio that's under 30%, so that way you're not deemed as risky by other lenders out there whenever you guys are trying to apply for something. Because best believe, if you guys have a credit utilization ratio that's over 30%, then for the most part, you're not going to get approved for whatever it is you're trying to get approved for. So for example, if you guys have a few credit cards that equal to the amount of $10,000 and you owe $3,000 across all of your credit cards, then that's definitely going to put you over a 30% credit utilization ratio. So if this is you with a $10,000 limit, then do not carry any debt above $3,000. Now really, you guys want to be under a 10% credit utilization ratio so that way you guys can get the best rates and approval odds. But if you guys want to maintain an 800 credit score, then I would personally keep your credit utilization ratio below a 5%. Now the good thing with credit cards and credit usage, ladies and gentlemen, is the higher credit limits you guys have, then the more you guys can spend on those credit cards without your usage being so high. So for example, if I have $100,000 in credit limits across all of my credit cards and I still owe that same $3,000, then that's only going to put me at a 3% credit utilization ratio versus being at a 30% credit utilization ratio. So this is why you guys always want to ask for credit limit increases and apply for high limit credit cards. Honestly, when it comes to credit limit increases, you guys, I'm only going to ask for a credit limit increase with credit issuers or lenders out there that will increase my credit limit with only a soft pull being done to my credit. And a quick example of some credit issuers out there that are going to be doing soft pulls for credit limit increases is going to be Navy Federal Credit Union, American Express, Chase Bank, Discover, and even the Apple Card. If a credit issuer will only increase your credit limit by doing a hard pull to your credit, then I just simply would not do it. If they want to pull your credit for a credit limit increase, then I simply would just get another credit card because it just makes the most sense too. I've said this before and I've said this in my other videos, but I would much rather get a new credit card with more benefits and even a welcome bonus before I let my credit get pulled just for a credit limit increase. And also bonus information, if you guys want high credit limits, then go to credit unions because credit unions will definitely give you high credit limits. Credit unions are member owned and not for profit, while big traditional banks, on the other hand, like Chase Bank, are just solely here to make another dollar off of you. The thing that's so good about credit unions versus traditional banks is that they're more so relationship based. So, in other words, the better relationship you have with a credit union, then the more they're willing to do for you as a customer. So, if you guys want more information in regards to credit unions and how they work, then I do talk about them quite often on my channel. So, just feel free to browse my channel or hit the link in the description below. And also, one more thing that you guys need to look out for is that some lenders out there will actually decrease your credit limit. So, in other words, lower your credit limit. The reason why a lender would even lower your credit limit in the first place is because you either have a missed or late payment, and by having one of these, ladies and gentlemen, this might be an indicator that you're struggling to manage your finances. Or another reason why they might do this is because you consistently have a high usage on that credit card, and they might be worried that they may have extended you too much credit that you cannot handle, so therefore they're going to lower your credit limit. Ladies and gentlemen, if they lower your credit limit, then your credit score is going to drop significantly because now you're at a higher usage now. So again, this is why you guys always want to make your payments on time and in full and stay out of debt. I actually partnered up with Smart Credit so that way you guys can maximize and maintain a good credit score by potentially removing late payments and using one of their features to show you how to lower your credit utilization. But better than me explaining it, I actually have one of the VPs from the company that's going to show you guys exactly how to do this. Okay, everybody, so this is Jimena, the VP of Partnerships at Smart Credit, and she's going to go ahead and walk you guys through the process.
Hi, well, thank you so much for having me. And yes, I am going to go ahead and share my screen so that we can go into a test account. And just like you were talking about the late payments and the credit utilization, Smart Credit makes that really easy to do on your own. So I'm going to start with the fastest way that you could potentially increase your credit score points, and that would be with the score boost. So that's going to deal with the credit utilization. And so when I go in here, when you sign up for Smart Credit, it's automatically pulling your credit report from TransUnion. And so we've got your credit cards already in here. You don't have to put any of this in. It's already coming through. And so we'll know your balances. And so, for example, this account here, they owe $7,600 in credit card debt. If they were to pay it all off, this is how many points their score would go up. Let's say you can't afford that. So you just move the dial to whatever you can afford for the next month. And it's going to take that budget and it's going to divide it amongst all of your credit cards so that you know exactly how much to pay and by which date, which is the key. And then it's also going to calculate how many points your score will go up. So it's telling you, based on what you can afford, how to maximize that budget to get the most points the fastest. And then likewise, this test account doesn't show this very well, but if you're going to spend a lot of money, it tells you which cards to put it on. It shows you, okay, if you don't pay it back, this is the cost to your credit score in points. And it's going to tell you which card gives you the most time available for you to pay it back. So, for example, your due date is not necessarily when you should be paying. So, every credit card company has a certain date that they report your information to the bureaus,
Right.
and it's different. So how do you even know that, right? It's very difficult to find this information. We've already mined that, and we just do all the calculations for you. For example, I was stuck at a 740 for the longest time, and all I did was change when I was paying my credit cards, and I went up 52 points, and now I'm usually in the 790 to 800 range whenever I log in. And all I did was just this because I didn't have any late payments. The other thing is the score builder. Now, if you have late payments, you can go in here, and I'm going to go through this kind of fast. It's going to first give you a little bit of a tutorial. You don't really need to go through this, but it'll show you like, okay, these accounts are in good standing. They will help your score. These accounts are hurting your score. Now, most places stop here, give you some advice, but you still have to do a lot of things yourself. So we're actually going to keep going, and we're going to help you out with some of this. So you see here my first problem account, HSBC Bank. I have a 90-day late. There's a few things I can do. Let's say this was identity theft. I'd click here. Let's say this was a credit reporting error. It's not 90 days. Let's say it's 30 days or not at all. I'd click there. Or let's say this was actually correct. I'd click in here. When you click in any of these, this is pretty much how it looks. and then you just find your reason that is actually for you in this drop down. It'll auto-populate that for you, or you can type your own information in here. And then when we click the blue button, we're going to send a letter on your behalf to HSBC
Mm.
Bank to potentially get this removed.
And
So
you guys have had a pretty good success rate on this, right?
yes, I mean, we've been around for 22 years, so we wouldn't have made it that far if we hadn't.
Yeah, yeah, that alone speaks for itself.
Yeah.
Now, the third way that you guys are ruining your credit score is by closing old or unused credit card accounts. The reason why you guys don't want to close an old credit card account, even if you don't use it anymore, is because this is going to hurt your credit score significantly for two big reasons. The first reason why it's going to drop your credit score is because now you have a lower overall limit, which will then bring your credit utilization ratio higher because you have a lower overall limit now. And just like we talked about earlier, the higher usage is and the lower your credit score is going to go. But the second reason why this is going to lower your credit score is because closing an old credit card account lowers your credit history. For those of you guys out there that don't know, 15% of what your credit score is made out of is your length of credit history, which reflects how long you've been using that credit card and how well you managed the account over time. So if you guys close an old or unused credit card account, especially if it's one of your oldest credit cards, then this is going to decrease your credit score because now you have shortened that credit history. And the thing you guys need to watch out for is that if you guys are not using the credit card like at all, then the company will actually close the credit card out for you due to inactivity. It's personally happened to me before on one of my Best Buy credit cards like 5 years ago. I didn't use it. They closed my account. My credit score dropped because my usage went higher and it was just a big mess. And I regret not using that credit card. So just remember to use your credit card ever so often. Now, the fourth way that is surprisingly ruining your credit score is identity theft. The reason identity theft can ruin your credit score is because a thief can literally open up new accounts in your name and run up the debt without paying it back. So this means they can open up stuff like credit cards under your name and use those credit cards, bringing the credit utilization ratio higher, and then even worse, not paying the credit cards back, which will then decrease your credit score. Like let's say a thief opens up a new credit card in your name and gets approved for $5,000. They can use the whole entire amount and then not pay it back, which will then rack up usage and then report as a late payment. And I want to bring Jimena back from Smart Credit so that way she can talk about this a little bit more and show you guys how to protect yourself from identity theft using Smart Credit.
All right. So here with every account, you're also going to get $1 million of identity fraud insurance. So if you were to go to some of our competitors, you're going to be paying around $12 or so per month just for this. It's included free in your account. You just have to activate it. So you've got that going on. And the last thing I will show you, I do have to log into my personal account to show you this. So you can see here, I've had this account for a long time, obviously, but the Privacy Master is another feature that we launched recently. And what this does is it actually removes your personal information from other sites that are selling like where you live, where you used to live, who your parents are, where they live, all this kind of information. I can go online and I can pay $15, $20 and get all kinds sorts of stuff about you and have an easier time stealing your identity or using your information, right? So
Nice.
what this does is it's constantly searching the web. You can see my next scan is in 4 days. So this scans every 14 days to see
Mm.
did your information show up on any new sites? Did any sites that we remove you from put your information back? Because that happens a lot. So this is kind of like a cat and mouse game. You kind of can't stop playing. So you can see here my age. I did used to live in those places. So I'm going to just click remove. And that's going to go ahead and remove my information from those sites. Now that we have some competitors that charge around $15 per month just for that feature. So that's also included in your account. So
Nice.
between just the protection features, we're already at $27 a month of value, and you can actually pay a lot less for a smart credit depending on the membership that you get.
So it's just as simple as that, huh? Just click the remove button and that's it.
That's it. Sometimes
Um,
you might get an email just to confirm that you did that, but that's it. That's the extent of it.
nice.
So last thing I'll say, guys, make sure you go through Ismail's link because if you go directly to the site, we do not offer a trial. With his link, you do get a $1 7-day trial. There's two options. One is $23.95 and one's $29.95. And the only difference between the two is whether or not you have a 3 bureau report included. So either way, it's a huge value just on two features. You're more than paying for that. So we hope we can help you guys out. If you have any questions, just let us know.
Right on. Now, the last way, the fifth way you guys might be ruining your credit score is by errors on your credit report. By having errors on your credit report, like accounts that don't belong to you, especially if it's reporting as a late payment, then this can drag your credit score down unfairly. If you guys have an account that does not belong to you, what you guys need to do is get this corrected ASAP, because if you don't, this can actually lead to higher interest rates if you do get approved for something, or at the very most, not even get approved at all. So if you guys are trying to get like a new loan or credit card, or trying to get approved for that new apartment, then this can seriously affect your approval odds. Now again, Smart Credit does help with this, since you can check all three bureaus anytime you would like to, and they also have that neat feature to where they do 24/7 monitoring. So again, if you guys are interested in signing up for this, use my link in the description below so that way you guys can try them out. But that's going to wrap it up for today's video, guys. I hope you guys found value in any of this information as always. But if you guys made it to the end of the video, then I do truly appreciate you guys. We're at 80,383 subscribers at the time of this recording, so I do appreciate all who watch. I do post weekly videos for those that don't know, but if you guys haven't yet already, don't forget to hit the like button, subscribe to the channel if you guys haven't yet already, and don't forget to hit the notification bell so that way you guys get notified every time I post a new video. And again, we talk about personal and business credit, real estate, and other financial related topics. So if that's something you're into, then you're probably going to want to consider subscribing. We talk about how to get high limits on your credit cards, how to boost your personal credit, how to obtain business credit. We talk about real estate, we talk about mortgage loan programs, we talk about all that. So this is your one-stop shop. Thank you guys so much for watching, and I will see you in the next video. Thanks for watching.